Raising capital is the lifeblood that powers your business forward, fueling growth and innovation. It's the engine that drives your vision. Without it, even the most brilliant ideas can wither and die on the vine, unable to reach their full potential. Before you even begin seeking funding, you absolutely must know your business's true value. This is your business valuation, a critical first step. Think of it like getting a professional appraisal before putting your house on the market. It's a data-driven, objective assessment of your company's current worth, based on tangible assets and future potential. A clear and accurate valuation is absolutely essential. It directly determines how much ownership or equity you'll need to give up in exchange for the investment you receive. Undervalue your business, and you risk losing too much control for too little capital, a mistake that can haunt you later. Overvalue it, inflate the numbers, and potential investors will quickly lose interest and walk away from the deal. A solid, well-supported valuation builds trust and credibility, and sets the stage for fair and productive negotiations with potential investors. It demonstrates that you thoroughly understand your business, not just the product or service you offer. This crucial number fundamentally shapes your overall funding strategy, and significantly influences your ongoing relationship with your investors. Walk confidently into negotiations knowing exactly what you're offering in terms of equity and potential returns, and what you realistically expect in return, setting clear and achievable expectations from the outset. Ultimately, it's about more than just the money involved. It's about building respect, fostering a strong partnership, and creating long-term, sustainable value for everyone involved. Once you have a clear understanding of your business's worth, after careful valuation and analysis, it's time to carefully consider and choose your funding path, a critical decision that will shape your company's future: debt, equity, or a blend of both strategies. Debt financing essentially means borrowing money from a lender, like a traditional term loan or a revolving line of credit, giving you access to funds as needed. This borrowed capital is then repaid over time with interest, according to a set schedule, but you retain full ownership and control of your company. Equity financing, on the other hand, involves selling a portion or share of your business to investors in exchange for capital. You don't have to repay the money directly, but you do share a percentage of your company's future profits, and potentially some degree of control or decision-making power. A blended approach strategically combines elements of both debt and equity financing, perhaps utilizing a loan that has the option to convert into equity at a later stage, or simply employing a strategic mix of traditional debt instruments and equity investment to achieve your specific goals. Debt financing is generally most suitable if your business has a predictable and steady cash flow, and you prioritize maintaining complete control over your company's operations and direction. Equity financing is often a better fit for companies with bold, innovative ideas that require significant capital investment, even if it means diluting ownership and sharing some control with investors. Blended solutions can offer a high degree of flexibility and customization, making them ideal for businesses facing unique or complex financial situations. There's ultimately no one-size-fits-all answer when it comes to funding, so carefully choose the path that best aligns with your specific business goals and your personal comfort level with risk. A thorough understanding of these different financing options is absolutely key to making informed and smart financial decisions that will benefit your business in the long run. Selecting the right funding path empowers your business's growth and potential. Make your choice with confidence, knowing you've carefully considered all your options. Many entrepreneurs hit a wall with traditional banks: rigid requirements and little flexibility. A bank's no isn't the end. It's a sign to seek partners who understand real-world business challenges. Alternative lenders like Creative Global Funding Services step in where banks won't. CGFS funds businesses that banks turn away, focusing on your potential and plan, not just your past. They offer term loans, lines of credit, factoring for unpaid invoices, and startup funding tailored to your needs. Specialized options include real estate, equipment, and healthcare financing. CGFS isn't just a lender. They're a partner, finding the right solution for your growth. The right funding partner can make all the difference. Choosing the right funding path for your business is a critical decision. It's not just about getting money. It's about selecting the financial strategy that best aligns with your company's unique circumstances and long-term goals. The ideal funding source depends heavily on your specific needs and the current stage of your business lifecycle. Are you in the initial startup phase, Or are you looking to scale an already successful operation? Need cash for equipment, perhaps to ramp up production or upgrade your technology? A term loan often works well for these types of capital expenditures, providing a fixed sum repaid over a set period. Experiencing unpredictable cash flow, making it difficult to manage day-to-day expenses? In that case, try a line of credit. It offers flexibility, allowing you to draw funds as needed and only pay interest on what you use. For startups with no revenue, securing funding can be particularly challenging. These ventures often need equity investors, individuals or firms, willing to invest in exchange for a share of the company. They are willing to bet on your vision and potential for future growth, even in the face of current uncertainty. Profitable businesses expanding into new markets often have more options available to them. They should carefully protect their equity and consider debt financing as a viable option to fuel their expansion plans. The funding world is complex and can be overwhelming, with a multitude of options and considerations. Don't go it alone. Navigating this landscape requires expertise and a clear understanding of your business's financial health. Expert advisors can help you prepare your business for funding, accurately value your business, and connect you with the right funders who align with your goals and industry. Companies like CGFS bridge the gap for entrepreneurs with vision, but limited access to the necessary capital and resources. If you're serious about raising capital and taking your business to the next level, seek expert help from experienced financial advisors. This will allow you to focus on what you do best, growing your business and serving your customers. That's how you turn a good idea, a spark of innovation, into a great company that thrives and makes a lasting impact.